What is up, guys? Welcome back to another episode. Today was Lucid earnings. Many of you have probably already listened to the earnings call. However, I have not. So I'm going to go ahead and listen to the earnings call on 1.25x. I'm going to take notes, my thoughts. We're going to, and then I'll do a summary at the end. But if you guys are watching late with me, I really appreciate it. Leave me a comment down below. We'll talk about it during the summary. We'll address your guys' questions. I'll try my best to show you my point of view on things. And yeah, let's go ahead and jump into it. So I have the earnings call here. I'm going to do a quick sound check to make sure that everybody can hear it, and then we will go ahead and we're going to go ahead and dive into it. So yeah, thank you guys for hopping on late with me. Sorry that it wasn't live, but hopefully we can still have just as good of an experience. It looks like a lot of you were not happy with the earnings report per the poll. So let me do a quick sound check. Okay, that sounds good. Now let's do an audio check.
And welcome to the Lucid Group second quarter 2025 earnings conference call. Please be advised that today.
Okay, cool. All right, so we're good to go. Let's go ahead and take a listen. I'm going to I'm going to start typing my note. All right, I don't hear myself. Okay. All right, I'm going to mute that. Cool. All right, I'm going to go ahead and start listening to it. Let me go ahead and pop my screen up here. Let's do that one. Okay, let's go ahead and listen to it. I'll have my notes going. I'll probably mute my microphone unless there's something like crazy that they say. I haven't listened to it yet. So actually, I may go ahead and have we can review their deck. Okay. Yeah, let's go ahead and listen.
Today's conference is being recorded. Later, we will conduct a question and answer session. If you have a question, please press star 11 on your touchtone telephone. I would now like to turn the conference over to your speaker for today, Nick Twerk, Vice President of Communications. Please go ahead.
Thank you, and welcome to Lucid Group's second quarter 2025 earnings call. Joining me today are Mark Winterhoff, our interim CEO, and Taoufiq Boussaid, our CFO. Before handing the call over to Mark, let me remind you that some of the statements on this call include forward-looking statements under federal securities law. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, vehicles and products, studios and service networks, financial and operating outlook and guidance, macroeconomic, policy and industry trends, tariffs and trade policy, company initiatives, and other future events. These statements are based on various assumptions, whether or not identified in this communication, and on the predictions and expectations of our management as of today. Actual events or results are difficult or impossible to predict and may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our annual report on Form 10-K for the year ended December 31, 2024, subsequent quarterly reports on Form 10-Q, current reports on Form 8-K, and other SEC filings, and the forward-looking statements on page 2 of our quarterly earnings presentation, available on the investor relations section of our website at ir.lucidmotors.com. We undertake no obligation to revise or update publicly any forward-looking statement for any reason, except as required by law. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in the earnings presentation. With that, I'd like to turn the call over to Lucid's interim CEO, Mark Winterhoff. Mark, please go ahead.
Thank you, Nick. And thank you, everyone, for joining us in our second quarter 2025 earnings call. I'd like to begin by expressing my sincere appreciation to our employees, customers, partners, and shareholders. Your continued belief in our mission is what drives us forward every day. In the second quarter of 2025, we achieved meaningful progress on both operational and strategic fronts. We delivered 3,309 vehicles, up 38% year over year, now a sixth consecutive quarter of record deliveries. We produced 3,863 vehicles, up 83% year over year. As expected, ASP increased sequentially this quarter due to improved mix. However, gross margin was negatively impacted by tariffs, as Taoufiq will detail.
I cannot hear him or understand him, really. I'm going to slow it down to 1x really quick. I thought I could listen to this on 2x, but I cannot hear him.
83% year-over-year. As expected, ASP increased sequentially this quarter due to improved mix. However, gross margin was negatively impacted by tariffs, as Taoufiq will detail in his remarks. First, we've been sharing with you that we are in active discussions about partnerships beyond selling or licensing our industry-leading EV technology. On July 17th, we took a big step in this direction with the announcement of a partnership with Uber and Nuro on a next-generation premium robotaxi created specifically for the use on Uber's ride-hailing platform. This partnership combines the industry-leading software-defined vehicle architecture of the Lucid Gravity, the scalability and proven capability of the Nuro Driver Level 4 autonomy system, and Uber's vast global network and dynamic fleet management, delivering a fully integrated robotaxi experience developed for comfort, safety, and scale. Our industry-leading efficiency and technology, like our AV-capable sensor suite, redundant steering and braking systems, and highly efficient, compact, and high-power density motors, help maximize uptime and reduce operating costs per mile. Key success factors in a successful robotaxi program. The Lucid Gravity software-defined architecture makes it the ideal platform for third-party autonomy stacks. As part of the agreement, Uber will invest $300 million in Lucid, subject to regulatory review. Uber plans to deploy a minimum of 20,000 Lucid Gravity vehicles equipped with the Nuro Driver over 6 years in dozens of markets around the world, with the first vehicles launching late next year. This is an important step for Lucid into the multi-trillion-dollar robotaxi market, but it's only the first step. And while we are working with external partners on this initiative, we continue developing our internal ADAS and AD capabilities, such as our recently announced hands-free driving software update, with more improvements to be announced. We're also leveraging our partnership with the King Abdullah University of Science and Technology, or KAUST, to train our AI models for ADAS and AD and bring cutting-edge innovation from the lab to the road. I've been clear about our intention to monetize Lucid's technology through licensing deals or strategic partnerships. And this announcement signals our right to win in new markets. Uber's investment in Lucid is yet another example of a third party validating our highly advanced technical platform, and we remain in active discussions with other potential partners. Second, we followed through on our commitment to drive awareness for our products and the Lucid brand last week when we announced Timothée Chalamet as Lucid's first ever global brand ambassador. Chalamet will be featured in a new campaign promoting Lucid Gravity that marks another significant milestone in our commitment to raise brand awareness. This first campaign of the partnership will launch in early September. In addition to stimulating near-term demand, this multi-year partnership with Timothée is designed to anchor the Lucid brand in popular culture ahead of our entry into the mass market with our midsize vehicles. Now, let me take a moment to go in depth to explain how these initiatives fit into our mission to not just deliver the best car in the world, but also the best business. Since we started our respective roles, Taoufiq and I have dedicated time to aligning our priorities for the business. We are laser focused on 3 important near-term priorities for Lucid. These are, first, operational discipline. Second, building a distinctive, scalable brand. And third, maintaining and enhancing a sustainable edge through our technology. Operational discipline relates to focused on 3 important near-term priorities for Lucid. These are, first, operational discipline. Second, building a distinctive, scalable brand. And third, maintaining and enhancing a sustainable edge through our technology.
Sustainable.
Operational discipline relates to manufacturing, cost control.
What did he say?
And third, maintaining and enhancing a sustainable edge through our technology.
Something about technology.
Operational discipline relates to manufacturing, cost control, and practically every element of the business. As we communicated in our press release, our target is to produce 18,000 to 20,000 total vehicles in 2025. And as of the second quarter, we have produced just over 6,000. On this topic, I feel that it is important to acknowledge that we are not where we want to be with Lucid Gravity production relative to our target at this point in the year. However, our team has been working very hard all year to address bottlenecks in our supply chain and improve manufacturing efficiency. I'm happy to say that we have overcome most of these issues and are beginning to ramp up Lucid Gravity production. We believe we will significantly increase production in the second half of the year. The challenges we faced were multifold, but can primarily be attributed to, first, the capacity of certain suppliers in our supply chain, and second, the availability of magnets originating in China, an industry-wide challenge. To the first point, we've been working closely with our suppliers to alleviate issues that could prevent us from producing the necessary volume to achieve our targets in the second half of the year. We've also implemented key initiatives that are focused on fostering enhanced accountability and data-driven decision-making. We're already seeing the benefits of this as we work diligently to improve Lucid Gravity production. Turning to the second point, to mitigate geopolitical supply chain challenges, our team was able to quickly integrate substitute magnets in production. And because of our nimble in-house vertical integration, this process took weeks instead of months. Software changes, manufacturing changes, and software-hardware integration all work together to make this happen. Without our vertical integration and ability for our team to make quick changes, we would have stopped production in Q2. I'm happy to say that we believe this issue is behind us, and we have secured enough magnets to meet our production target for the remainder of the year. As we have noted before, we have a strong commitment to our US-based manufacturing.
What?
The year. We would have stopped production in Q2. I'm happy to say that we believe this issue is behind us, and we have secured enough magnets to meet our production target for the remainder of the year.
Magnets?
As we have noted before, we have a strong commitment to our US-based manufacturing. We believe this will make us more resilient and help mitigate the impact of tariffs and other geopolitical issues. In that regard, I wanted to highlight a couple of recent announcements that further support our position. First, in June, we announced a preliminary agreement with Graphite One to source natural and synthetic graphite domestically, beginning in 2028. This agreement complements our existing non-binding supply agreement with Graphite One that was signed in April of 2024. Following this announcement, we helped establish the Minerals for National Automotive Competitiveness Collaboration, or MINAC, a partnership among US critical minerals producers that are focused on supporting US-based manufacturing and sourcing. We view these as necessary corrective steps to help insulate our supply chain from global volatility. We also recently celebrated the opening of Panasonic's US factory in DeSoto, Kansas. Panasonic is one of our key suppliers, and the presence of this US factory will strengthen our domestic supply chain starting in 2026. Our next priority is to amplify demand through brand, marketing, and partnership initiatives. Our team's hard work in this regard has been on display through recent announcements over the past few weeks that I've already discussed. I'm pleased with the progress we are making to enhance our brand, but this work is only the beginning. As I mentioned earlier in my remarks, in September, we plan to launch a new Gravity brand campaign featuring Timothée Chalamet as part of our broader partnership. To further deepen brand affinity and trust, we are expanding our efforts beyond traditional advertising. This includes new brand ambassador partnerships with world-class athletes, influential cultural voices, and globally recognized creators who share our vision and values. We are also developing strategic collaborations with brands and organizations at the forefront of sport and culture. These partnerships will allow us to tap in new communities and strengthen emotional connection consumers have with our brand. Regarding the scalability of our brand, many new customers are now experiencing Lucid Gravity in our studios, and we're seeing a high order conversion rate for prospective customers once they experience the vehicle. In fact, our daily order rate has nearly doubled since display and test drive vehicles have been widely delivered to studios. Our final priority is to maintain and enhance our competitive edge through our technology. Engineering and technological excellence have long defined Lucid's brand, and we remain committed to these tenets as we grow the business. Just a few days ago, we deployed a software update to our DreamDrive Pro advanced driver assist system. This update enables hands-free driving and lane changes, and is also expected to be released for Lucid Gravity later this year. Recently, we also began production of the 2026 Lucid Air, which features a new battery pack for touring models that extends the model's EPA-rated range to 431 miles, compared to 406 in the previous model year. Notably, all 2026 Lucid Air models now utilize the same AC compressor as the Lucid Gravity, marking the beginning of further efforts aimed at part commonization across our vehicle lines. The Lucid Air Grand Touring demonstrates its range leadership recently by garnering the Guinness World Record of the longest journey by an electrical vehicle on a single charge. Additionally, Car and Driver named the Lucid Air Sapphire the quickest car they've ever tested, toppling the Porsche Taycan Turbo GT Weissach. The Air Sapphire set a 0 to 60 time of 1.9 seconds and completed the quarter mile in 9.1 seconds. In Jason Camisa's ultimate drag race on Haggerty, the Lucid Gravity Dream Edition with dual motors completed the quarter mile in 10.5 seconds, matching the quad motor Rivian R1S. But where the Lucid Gravity truly stood out was in acceleration beyond 60 miles per hour, showcasing the superior passing power and highway merging confidence that define Lucid performance. The same Lucid Gravity Dream Edition can also reach 150 miles per hour faster than a Corvette Z06, according to Car and Driver. At the beginning of my remarks, I highlighted our recent partnership with Uber and Nuro, which showcases and validates that the advanced capabilities of Lucid Gravity provide an ideal platform on which to integrate AD technology. Looking ahead, our midsize platform vehicles will play a crucial role in maintaining Lucid's competitive edge in technology. These vehicles will have been meticulously designed to achieve leading product features and specifications with low cost, enabling us to position our company for significant market expansion. By adopting this approach, we aim to strike a balance between cost competitiveness and high volume production, while still preserving the premium attributes that our customers have come to expect from Lucid. Technology leadership is the key enabler for this previously opposing combination. A prime example of this approach is our Atlas Drive unit, which serves as a cornerstone of our higher volume and cost efficiency strategy. We are committed to enhancing our powertrain efficiency leadership, while simultaneously achieving lower costs and maintaining exceptional performance. Lastly, as you may know, the Lucid Gravity was the first non-Tesla vehicle sold to offer a built-in NACS connector and supports native Tesla supercharger network access. We have also recently opened this access for Lucid Air owners as well. As of July 31st, Lucid Air owners with an approved adapter in North America can now charge their vehicles at any one of the 23,500 plus Tesla supercharger locations throughout the country, with access integrated into their Lucid app. This is in addition to more than 30,000 CCS chargers already available across North America to Lucid drivers. In closing, we are not simply building electrical vehicles. We are pushing the boundaries of what EVs can be. From the record-breaking performance and efficiency of the Lucid Air to the game-changing Lucid Gravity to our upcoming midsize platform, our technology continues to redefine what's possible. While our mission isn't only to make the best EVs in the world, it's to build a great business around them. That means continuing to drive innovation while also scaling intelligently, building a robust supply chain and making strategic decisions that position us for long-term success. We're entering a pivotal new phase, one where world-class engineering meets world-class execution. And with the talent, focus, and drive across our team, I truly believe we're just getting started. Thank you for your continued belief in Lucid, not just as a car company, but as a company shaping the future of mobility and American manufacturing.
Thank you, Mark, and thank you to those who are joining us today. I'd like to build on Mark's comment by sharing more details about our operational and financial performance this quarter. I will also provide clarity on the strategic steps we're taking to position Lucid for the long-term success. In the last few months, our focus has been on execution, turning strategic commitments into measurable progress across production, cost discipline, and financial resilience. We have also taken meaningful steps to strengthen our capital structure and accelerate monetization of our technology. One of our most significant recent developments was our agreement with Uber and Nuro, which represents far more than a commercial transaction. It is a strategic alignment with two leading players in mobility and autonomy, which choose Lucid Gravity as the core platform for the next generation robotaxi. Uber's planned $300 million investment in Lucid, subject to regulatory approval, will directly support the development and integration of this program. It reflects external confidence in our underlying architecture and is a validation of the broader platform opportunity we see beyond direct-to-consumer sales. It also confirms our ability to create scalable enterprise value by deploying our technology in new verticals, fleet, autonomy, and AI mobility. In parallel, we announced our intention to implement a 1-for-10 reverse stock split. This is not a cosmetic action. It is a deliberate and targeted measure to ensure Lucid's equity remains accessible to a broader universe of long-only institutional investors. It also aligns our share price with the strategic trajectory of the company as we move into the next chapter of scaling our operations and deepening our capital markets engagement. The reverse split is expected to take effect in early September, subject to shareholder approval. Turning now to the numbers, we have delivered $259 million in revenue in Q2, marking a 29% increase year over year. We produced 3,863 vehicles and deliveries reached 3,309 units, up 38% compared to the same quarter last year. This marks our sixth consecutive quarter of record deliveries. Despite the ongoing challenges facing the EV sector, particularly in supply chain, we maintained positive momentum and continued progressing towards our volume targets. Given the continuously shifting market environment, we have decided to provide our production guidance as a range. Gross margin for the quarter was negative 105%, reflecting a $54 million impact from tariffs alone. This impact accounted for a 21 percentage point decrease in gross margin, offsetting the benefits from sequential improvements in ASP. While we anticipated this pressure, we acted production guidance as a range. Gross margin for the quarter was negative 105%, reflecting a $54 million impact from tariffs alone. This impact accounted for a 21 percentage point decrease in gross margin, offsetting the benefits from sequential improvements in ASP. While we anticipated this pressure, we're actively taking decisive actions to move margins back towards a positive trajectory. These actions include material cost optimization, improving production efficiency, and tighter inventory management. We also saw continued cost discipline across the organization while maintaining targeted investment in product and brand. R&D totaled $274 million for the quarter, reflecting higher spend on the mid-size platform and Atlas powertrain. SG&A was $257 million towards a positive trajectory. These actions include material cost optimization, improving production efficiency, and tighter inventory management. We also saw continued cost discipline across the organization while maintaining targeted investment in product and brand. R&D totaled $274 million for the quarter, reflecting higher spend on the mid-size platform and Atlas powertrain. SG&A was $257 million, a sequential increase as spend normalized following the one-time reversal of previously recognized stock-based compensation expense in the first quarter. Importantly, we are continuing to make deliberate trade-offs across the business, investing where it matters and streamlining where appropriate. Adjusted EBITDA was negative $632 million, down 12%, driven mainly by gross margin pressure. We ended the quarter with $3.6 billion in cash and investments and total liquidity of $4.86 billion. Our financial position remains strong, providing us the runway to fund operations and execute our long-term plans. CapEx totaled $183 million, consistent with our guidance, and inventory rose to $713 million, reflecting Lucid Gravity production builds and preparations for ramp-up. Looking forward, we are navigating an environment that remains volatile and uneven. We flagged earlier this year the potential impact of tariff-related margin headwinds in the range of 8 to 15%. Based on what we know today and the mitigations we have already activated, including the localized sourcing, engineering substitutions, and vertical integration, we now believe the actual impact will fall at the lower end of that range. We are also continuing to manage exposure to magnet supply risk through a combination of supplier diversification and in-house reengineering. The lessons learned during the Lucid Gravity ramp are informing our decisions as we prepare for the start of mid-size production in late 2026. On the policy front, most of you are aware of the $7,500 EV lease credit will be eliminated beginning in Q4 of this year. We have defined countermeasures that will be implemented in Q3 to address this change. This next phase of our strategy will require us to scale with precision. The mid-size platform represents a critical opportunity to expand Lucid's addressable market, enhance manufacturing leverage, and offer a broader value proposition to customers without compromising on performance and efficiency. We are applying everything we've learned from the Lucid Gravity to ensure this program comes to market with greater agility, lower unit costs, and shorter lead times. Lastly, we are updating our annual production guidance to a range of 18,000 to 20,000 vehicles. Going forward, we will provide production guidance as a range to reflect the potential impact of continuously changing market environment and external factors. We are refining our 2025 CapEx guidance to a range of $1.1 billion to $1.2 billion. This adjustment reflects a more focused investment approach, prioritizing critical programs with the highest near-term return and long-term strategic value, and deprioritizing lower return investments. We remain committed to firm return and long-term strategy 25 CapEx guidance to a range of $1.1 billion to $1.2 billion. This adjustment reflects a more focused investment approach, prioritizing critical programs with the highest near-term return and long-term strategic value, and deprioritizing lower return investments. We remain committed to funding future growth, and all other operational and strategic targets remain unchanged. Let me close with this. At Lucid, we are committed to building a great company, not just a great product. That means scaling responsibly, investing wisely, and staying laser-focused on the fundamentals: quality, cost, and capital discipline. We are operating in one of the most dynamic and competitive industries of our time. What will distinguish the winners from the rest is not ambition alone, but execution. And execution is what we are committed to. Thank you for your continued belief in our mission. And with that, I turn it back to Nick to open the line for questions.
Thanks, Taoufiq. We'll now start the Q&A portion of the call. Before we take questions from those on the phone, I want to pose the questions that our retail investors sent in through the Say Technology platform. The first question comes from Sean B. How many current Gravity orders are there?
We don't disclose the specific number of orders we've received. However, as I referenced in my prepared remarks, customers are now experiencing Lucid Gravity in our studios, and we are seeing a high conversion rate once people see the vehicle for themselves. We are happy with what we're seeing, and we remain supply constrained and not demand constrained. We expect the situation will normalize soon.
Our second question comes from Paul C. Is the midsize platform still on target for production in late 2026? Are deliveries expected to start in 2026 or 2027? And did the acquisition of the Nikola facilities allow midsize to be brought forward at all?
The midsize is still scheduled for start of production in late 2026, and we are planning to unveil the vehicle next year. Given that production starts in late 2026, we expect deliveries to ramp up throughout 2027. Regarding the Nikola facilities, while the facilities we acquired bring added capabilities, they will not impact the timeline of our midsize vehicles.
Our third question comes from Adrian D. How will the partnership with Uber aid in company growth, and how big of an impact do you expect it to have?
The strategic partnership with Uber and Nuro is our entry into a large and very attractive market. As far as impact, partnering with companies like Uber and Nuro is another data point that validates Lucid's highly scalable platform and signals our right to win in new markets as we continue to pursue additional partnerships. This is the start of our path to extend our innovation and technology leadership into this multi-trillion-dollar market.
Now we'd like to take questions from the phone lines. Operator?
Thank you. As a reminder, to ask a question, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, press star 11 again. One moment while we compile the Q&A roster. And our first question will come from the line of Andres Shepherd with Cantor Fitzgerald. Your line is open.
Hey, everyone. Good afternoon, and thank you so much for taking our questions. Congratulations on the quarter. Hey, just a quick question on ASPs. Just given the macro environment, should we be expecting any changes to the midsize initial ASPs as they ramp up? Thanks.
Midsize ASPs ramp up, I think that is still some time out. Are you referring to Gravity?
No, just on the midsize. I know we're not there yet, but just curious if, as the macro worsens, if you're expecting any changes to initial ASPs once it's available.
No, I mean, there's no plan and no expectation that the ASP of the midsize will be impacted. As a matter of fact, I mean, we have the current situation. I personally and we as a company see this also as a temporary phase where we had a big hype on EVs a couple of years ago, and now there's more a slowdown. But we are fully convinced that EVs is the way forward, and this will normalize over the next years.
Got it. That's very helpful. Thank you. And just as a follow-up, maybe for Taoufiq, can you just remind us the plans regarding the 2026 convertible that's coming up? Like, remind us how you're planning on addressing, I think, the remaining $900 or so million that's left. Thanks.
Yeah. Hi, Andres. So, I mean, the plan is still, I think we touched quickly on it last time we spoke. I mean, the plan is still to go to the market in the next coming quarters. So, I mean, there's no change to that. So, obviously, we're carefully monitoring the market situation in order to take advantage of the best conditions. But it's something that for the moment we're planning for towards the end of 2025, early 2026.
Wonderful. Thank you so much. Congrats again. I'll pass it on.
Thank you, Andres.
One moment for our next question. And that will come from the line of Stephen Gengaro with Stifel. Your line is open. Mr. Gengaro, if you're on mute, please unmute your line.
Okay, sorry about that. I hit mute by mistake. Thanks for taking the questions. What I would like to start with, if you don't mind, is can you talk about the approach, the current approach, and if it's changed to licensing agreements and kind of what you see the potential there for over the next couple of years?
Yeah. I mean, actually, the comment on that one would not change or has not changed compared to what I said 3 months ago, because we have still ongoing discussions on that topic. Most of the other OEMs we are talking to, they have other problems right now. I mean, they're still very much focused on grappling with the tariff effect and those kind of things. And so those discussions are still happening. They're just progressing slower. And we still see the potential in those deals. But as I said, the last time.
Would you like that? No, thanks. No.
Background noise there. But we also have now discussions on partnerships beyond this topic, and this is the Nuro and Uber deal is one example of that, and that's now what we are expecting to come to fruition more in the future as well.
Great, thank you, and I apologize for that background noise. The other question, just the update on how the new Atlas powertrain is coming, and sort of your confidence in the development of that and the efficiency of that product versus kind of, because you're just so well known for how efficient the motor systems are. So just curious where things stand there.
Yeah, on track. I mean, to say it short, because obviously this is our next generation powertrain that will achieve, or we're targeting to achieve, the same efficiency or even better at a much lower cost. So we are fully on track with that at this point, and yeah, looking very much forward to deploy this in the midsize platform as the first vehicle.
Great. Thank you, Marc.
One moment for our next question. And that will come from the line of James Piccirillo with BNP Paribas. Your line is open.
Hi, guys. This is Jake on for James. I was wondering if you could just quantify Gravity deliveries in the second quarter. And based on third-party data, which is admittedly unreliable for Lucid, there were no deliveries in July. So is there a hang-up, like quality issue with the Gravity delivery ramp? And when should we expect to see material volumes?
Yeah. Well, let me address July first. That number is false. And that's all I want to say about that. It's totally false. But when it comes to number for second half, we're not disclosing this, but we're definitely in the process right now of ramping up Gravity. In the second half of this year, the Gravities will actually be the majority of our deliveries. But yeah, going back to the July number, we saw that as well. But yeah, it's unfortunate that something like this is published.
Yeah, thanks for clarifying on that. And then CapEx is an area where I think you guys have done a good job controlling your costs, keeping it under expectations. But even the revised guide, it looks like you're implying spending will more than double in the second half. So could you just talk through some of the puts and takes there? Thank you.
Well, I mean, as you can imagine, I mean, when it comes to the CapEx spend, it's not a linear exercise. So, I mean, between the moment you place your POs, you finalize all the blueprints and so forth, I mean, there's a lag of time. So this is why, I mean, we see a CapEx which is backloaded. So most of the spend will be related to our AMP2 facility in KSA. So again, it's not a linear spend. And what we have tried to do is to have a critical look at all the CapEx spend proposal and make sure that we only spend where it deserves to be spent with the highest probability of return and the highest level of return, hence the revised guidance that we have provided. But again, yes, I mean, most of the spend will happen in the second half of the year.
Thanks, guys.
Thank you. As a reminder, if you would like to ask a question, please press star 11. Our next question will come from the line of Tobias Bates with Rothschild. Your line is open.
Hi. Good evening, Marc and Taoufiq. I hope you're both well, and thanks for your time. I have 3 questions, if that's okay. 2 for Marc and 1 for Taoufiq, and I'll ask them separately. Marc, in your prepared remarks, you cited the supply of magnets as constraining production, but output in the second quarter was at an all-time high and also above demand. And I also understand that Gravity in the Air use the same amount of magnets. So I'm slightly confused, and I was wondering if I can ask for further details on that topic, or if you can tell me what I've missed.
Yeah. Well, first of all, that problem is behind us. So we solved that problem in Q2. Second half of the year, we have secured enough magnets, so we have no problem with that anymore. When it comes to your second part, that the gravity and the air use the same magnets, that's actually not exactly true. Because what happens is that from each model year and from each model, we have minor changes in the chemical setup of the magnets and those kind of things. So that is not really correct. Yeah? So we had a shortfall for a certain trim, and we were able to overcome this with some magic, I would call it, that our engineering teams then were able to do. So we actually didn't miss production due to that in Q2, and that helped us over that hump.
Okay, I think I understand. Second question for Mark. About 2 years ago, I asked your predecessor to detail the timeline and the required milestones from then to starting production of the Gravity to help me judge progress from the outside. I was wondering if you could please do the same for the Atlas powertrain and the first model based on the mid-size platform.
Yeah, I mean, right now, one key thing that we're doing is basically we're in sourcing right now, and basically what I'm saying right now applies to the Atlas powertrain, but also to the midsize. So there's not really a difference because both of them will come at the same time. Then sourcing is important because we are sourcing right now for the so-called PV builds, which is the product validation builds. So all of the engineering work will be very quickly be finalized. And then from there, we go into a validation phase with all kinds of testing, including winter testing later in the year, and then homologation. So those are the things that are following. I guess the background of the question is, are we on track with what we planned, to start the production of the midsize in the end of 2026? And the answer to that, this is our current plan, has not changed.
Thanks for that. Tiffy, final question from me. How much of the step up in the write-downs on inventories and losses on firm purchase commitments is attributable to tariffs versus building raw inventory to aid the ramp up of the Gravity?
Yeah. So again, first of all, yes, there is an impact on inventory adjustment on inventory for the next 6 months commitment of purchases. It's as far as we see it, I mean, an event which will hit primarily Q2, because for the subsequent quarters, I mean, we will need to do a reversal, which will offset the new provision that we will book, provided that we maintain roughly an equivalent volume of procurement. So knowing that we have acquired and we did an increase in our inventory in Q2, we should expect the volumes to remain roughly stable in Q3 and Q4, and therefore it will not arise any incremental impairment that we might have to book. So we have stated that the tariffs, the impact from the tariffs in Q2 was amounting to roughly $55 million. So this is actually a net figure which is made of three different amounts. The first one is the actual tariff impact, which is in the range of $55 million. Then there's the impairment that we book only in Q2. And then there's a netting effect coming from the reimbursements that we're getting, the famous 3.75% that we're getting. So all this leading to a net $55+ million for the quarter.
Okay, so just some crystal clear, right? The 21 points of tariff impact, not all of it was actually realized in the second quarter. And you're still expecting some reimbursements to come later in the year. So actually the impact on the second quarter was more than 21%.
So no. I mean, we will have reimbursement, so this will continue. It's a flat percentage, which is function of the localization of the procurement activity and the volume. So this will continue until the end of the year. The only difference that will not happen, or the only element which will not happen or will not have an impact on our financial for the balance of the year, is the booking of the impairment of the inventory, because this will be netted off between reversal and provision that we book. So that's why when you look at the statement that we have, or the guidance that we have given, we are saying that the tariff impact on a full year basis will be on the lower end of what we have provided. So we said 8 to 15% on a full year basis. We have 21% in Q2, primarily because we had to book the first impairment on inventories. That will not happen for the subsequent quarters.
Okay, understood. Really appreciate the detail from both of you. Thanks for your time.
Pleasure.
Thank you. I'm showing no further questions in the queue at this time. This concludes Lucid's second quarter of 2025 earnings conference call. Thank you all for joining us today, and you may now disconnect.
All right, sweet. So that was actually, I'm gonna say it, better than I thought. I was expecting to be disappointed, but that was actually better than I thought. So let's go ahead and recap. And I think some of my takes are actually going to surprise a lot of people. So let me go ahead and pull my notes up here. And then I also want to share this tab. So if I go like this, you guys should be able to see it. Nice. Okay, so I want to be able to do that. I'll go like that. Boom. All right, look at that. Efficient. Pew. Pew. All right. Okay. I think a lot of my takes are going to surprise a lot of people. What did the stock do after hours? Obviously down, but 8%. So they're trading. Are they trading for? That announcement's almost been wiped away. Okay, that's fine. Okay. All right, let's do a full recap. And I think a lot of my takes are going to surprise you guys. All right, you guys ready? Okay, here we go. Holy cow, we just finished the Q2 earnings call for Lucid Motors. And to be honest, I was going into this call expecting to be slightly disappointed because I immediately read the top line numbers that we had missed margin. And I was like, what is management doing? We're losing the plot. But after listening to the earnings call and listening to this new set of management, I was pleasantly surprised. And I want to go ahead and tell you guys why. Their deliveries were up 38% year over year. Honestly, as somebody that pays attention to companies closely, I don't really care about the year over year numbers. So much changes in a year. I'm really focused on the quarter over quarter numbers. They talked about the tariff negative gross margins, and I saw a lot of headlines saying, Lucid's margins were down. And I was one of them, right? I was like, hey, Lucid's margins are down. This can't be good. I said I wanted 3 things for Lucid to focus on. And they actually hit 2 out of my 3 things on this call. So stick around because I'll explain it. He said, of course, they said on July 17th, they talked about their partnership with Neuro. That was a big success. And he says they take the comfort, safety, and scale of Gravity, Neuro L4, level 4 autonomy, and then the Uber network. I thought it was kind of a nice play on words. Timothy Chalamet is going to start an advertising campaign for Lucid in September. I apologize. This isn't time for football season. Lucid has run Gravity commercials during football season, Super Bowl season in the past. So it must be successful. I do expect some of they're probably going to spend a lot of money on SG&A going into Q3, Q4. But let's keep going. So he's like, the CEO, Mark, said, hey, we're going to we focus on 3 things: operational, discipline, scalable brand, and something about technology. It was really hard to hear him. I had to rewind it like 3 times and I still didn't get it. Anyways, he said that they ran into the supply chain, and I literally wrote again on my notes because I'm like, oh, here we go again, another excuse about supply chains. But I want to keep going into it because this call actually surprised me. I believe it was their CFO who was talking that really caught my ear. So they had supply chain issues, they overcame those, and they started talking about magnets. And I've been following the company for I followed it for a few years. I took a break and I kind of jumped back into it the last couple of months. And they had this issue. They had some issues with batteries. Apparently, it was a big deal. The CEO later clarifies that they worked their magic. The engineers did, and they fixed it. They said that they're going to continue to ramp up Gravity production. And there was a few tidbits in here that I have not seen anybody talk about yet. But he said they're going to ramp up production. The second half of the year volume is going to increase significantly. And he says that they've already worked with suppliers to alleviate any issues they've had for the second half of 2025. And the manufacturing changes that they needed to make only took weeks instead of months because they're vertically integrated. Nice to hear, putting those factories to use. This is when he started talking about magnets, and I was like, question mark. Like, was it that big of a deal? Apparently it was. They talked about their battery plant opening up in 2006. Sorry, not 2006, 2026. I apologize. It's been a long day. And he said they're going to work on amplifying the brand, world-class athletes, creator, ADAS athletes. He talked about the new battery changes that they've made, and they are now able to get 431 miles per battery charge. And it used to be 406, I think, and it was a 25-mile delta. My thought is, how much R&D, how much time, how much expense went into that 25-mile delta, and was that cost of that 25 miles was it worth it? Because after 400 miles, there's not really an excuse for range anxiety, especially with the Tesla chargers open. So I don't really know if I 100% agree with them pushing the envelope to get the extra 25 miles to get 431 miles of range. Yeah, it caught some headlines for a few days, but I don't know how many more cars it sold. I could be wrong though. This is the part that really caught my attention. He talked about the $54 million of impact from tariffs, and I was a little unclear how impactful that really was. But he said that they were 21. This was a 21 percentage point decrease in gross margin. Now, I want to show you guys something really interesting. Let me go ahead and share my screen with you guys here. This actually surprised me. As somebody that pays attention to the company, this genuinely surprised me. So right here, they're displaying their gross margins, and this has been something that I've been like pounding on the tables for a long time, that people need to focus on their gross, like the Lucid needs to focus on their gross margins, because until they're profitable per car, this company is going to be going through the dumps. Okay. And so their CFO started talking about margins. I was like, whoa, like it's been a few quarters since I've been on a Lucid earnings call, but I've never heard them talk about margins this way. This was impressive. So obviously in Q4 of 2024, they had negative 89%. This was their best margin quarter, which I'd actually wish I'd highlighted that earlier in some of my earlier videos, but I'm glad we have this now. And then in Q1 2025, they had negative 97%. Okay. Now this was my disappointment. I calculated as soon as the numbers dropped, I'm like, what was our gross margins? Was it better than the last quarter? And unfortunately, it hit negative 105. But here's the interesting thing. The CFO, I think it's the CFO. We're going to call him the CFO. If he's not, somebody correct me on the comments. But the CFO said that the gross margin had an impact of 21 percentage points. Okay. So if I just do some simple math and I do 105 minus 21, that gives us an 84% gross margin. So without tariffs, Lucid was on track to have their best quarter so far for gross margins. Now we're still negative gross margins, but it would have been their best quarter so far for gross margins, unless I'm missing something. But that, from what I can tell, it would have been their best quarter had it not been for tariffs. So am I throwing in the towel that Lucid gave up on their gross margins? No, not yet. Okay, you still saw their negative EBITDA get kind of whacked. I don't have a ton behind that. You saw their revenue get whacked. I think they said there was that was for a different expense. Well, never mind, forget that. Anyways, the revenue didn't get whacked. It's up slightly. It's the best revenue that they've had. They delivered the most cars. It should be. But once we start to see these gross margins go up, I think that you'll start to see a narrative shift in the company. Now, obviously, they have their three things. They're focused on discipline, brand execution with Timothy Chalamet, and I think this will actually be an interesting ad campaign to have during football season. And then they have their extended technology leadership. That you can see their deliveries here, where they're incrementally getting better every quarter. Their production was ahead of their deliveries. And then you can see them talk about the magnet issue that right here in this last bullet point. It's crazy that such a technical thing made it into like the earnings call. It was funny. Okay, back to my notes. I don't want to scroll through the slide deck for you guys because I have some other interesting thoughts. Anyways, so I put in my notes, margins, 3 exclamation marks. Yes, finally, they're talking about margins, because I hadn't heard on a Lucid earnings call for a long time somebody emphasizing margins. And he said that they're spending their R&D on the midsize platform. Like, great, we're talking about it. And he said that they were forecasting 8 to 15% margin headwind earlier this quarter, but now it looks like it'll be only an 8% headwind. He said, to put it in his words, towards the lower end of the 8 to 15% margin range. So that was good news, that margins are going to be better than feared. Margins are going to be better than they thought the tariffs were going to impact. The tariffs aren't going to impact the margins as badly as they initially thought. There we go. Okay, let's keep going. So they talked about the tax credit is ending in Q4 of this year. He said they have countermeasures for this. They didn't talk about it yet, but he talked about. They also talked about how important the midsize platform is, because it'll leverage the adjustable market. It'll let them use their technology, and it'll let them go more mainstream. I thought this was brilliant. So I'm like, wow, they hit. Because usually I got onto the earnings calls and I would have like this wish list. I'm like, okay, I want Lucid to do these 3 things on the earnings call. And it would never happen almost, or they would say something that went against my wish list. But I had 3 things. I wanted them to talk about margins and work on it. Well, I wanted them to beat, but the fact that they talked about it kind of made up for it a little bit, because they didn't used to talk about it. And then I wanted them to go heavy on the mid-size platform, which it looks like they are. They talked about it for a good portion of this call. And then I wanted them to fill the voids in the market. And they didn't, but that was kind of a stretch anyways. Voids in the market, meaning like a big van, like a Sprinter style van, but I'll leave that alone. Okay, so they said that they're only going to give production guidance as a range going forward. I think they've shot themselves in the foot too many times saying a specific number and then getting close to it, but then still being punished for it. So they revised their guidance from 20,000 to 18 to 20,000, if that makes sense. Okay, so then they jumped into the questions, and we talked about this a few days ago in my pre-earnings call video, which was funny to hear these questions again. One of the questions was, how many gravity orders are there? And he said, we won't disclose this, but we have a high conversion rate, and we're happy with what we're seeing with conversion rate. He said, we are supply constraint, not demand constraint. Obviously, that's something good to hear as an investor. Okay. He said, the mid-size, and then somebody asked, when will are you going to do deliveries in 2026? And he said, well, we're going to unveil the mid-size platform in 2026, and we're going to do deliveries in 2027. So a couple more years. And then the question continued on, asking if the nickel factories made a difference in the speed of the ramp of the mid-size platform. And he said it doesn't change the ramp time at all. And he says, then he talked about the partnership with Uber and Nuro. They didn't get into any specifics about like revenue sharing, so I don't anticipate it. He talked about Uber's stock infusion, the investment infusion, as well as the car purchase. So I don't think that they're going to do any kind of revenue split, which is fine. One of the analysts, so then after the say.com questions from retail, they went to the analyst questions, and they said that the mid-size, they said that even though one of the analysts kept like, is the current macro going to change? Is the current macro condition going to change the price of the ASP, the average selling price of the mid-size platform? And they said no change. I think they'll probably introduce it from the $40,000 to $60,000 range. That's where they're going to introduce it. They're probably going to start on the high end of that range, the 60,000 trim, and go down. That's my guess. Until we learn more, that's my guess. I said, if they want to blow everybody's socks off, they should just go for like $35K and address that void that Tesla has of like a $25,000 to $35,000 car. But you can get like a used Model 3 for $25,000 to $35K. So they've kind of already filled that void, but whatever. I think that they could grab a lot of headlines for a long time if they introduced a super cheap car, because you have people that are wanting that cheap car, especially with Lucid's battery technology. Range anxiety and price anxiety could be a good solution, but their margins would get hammered on that car because I guarantee that car would cost more than $35K. Okay, guarantee is a strong word. We don't use that word in finance. I strongly think that it would cost a lot more to make. I would love to be surprised. Maybe they have a trick up their sleeve. I would love that. Okay. He said that the licensing, they still are in talks for licensing agreements, and I just kept. He went on for this for a while. I was like blah 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 in my notes, and I said this would be a really funny opportunity if Lucid announced I don't think they will because of Nuro, but if they announced an FSD partnership with Tesla, like Lucid that would be a really good fit for Lucid if they licensed Tesla's FSD. It would make it an extremely desirable product because people love the luxury of Lucid, but they don't necessarily like the lack of technology. So if you were to integrate Lucid with FSD, I think that'd be a great recipe. And I think that almost Tesla, I don't know if Tesla would even say yes to that because I think it'd be so crazy. They talked about that Atlas powertrain. They said it's on track. And they said there was this vicious rumor going around. One of the analysts brought it up. He said there was a vicious rumor going around about there was no deliveries for the Gravity in July. And the CEO said this is false. It's not true. And it's a shame that somebody would publish something like that. And he said this was one of the most interesting things to hear. He said majority of our deliveries in the second half of this year will be the Gravity. Now this, in my opinion, I could be wrong. This is obviously their largest margin car. This is the car with the best margins on it. And the fact that they have a ton of demand for it that outweighs the supply, I think this is going to be a very good margin boost for them. I think we should expect to see an improvement in margins in Q3, Q4. I could be wrong, but that's my guess. I think if he is accurate, I haven't seen anybody else talk about this. If he is accurate in saying that the Gravities will be majority of their deliveries in Q3 and Q4, I think margins will look a lot better. Hopefully we can get to the negative 50% like plus in terms of like plus going to zero margins. That would be insane. And I think that you'd actually start to see people like, whoa, what is Lucid doing? Wait, they're doing a mid-sized car now. They're doing a Model Y competitor. What? So I think you would see a lot of heads turn if they can start to get margins going that way. They talked about the magnet problem again for a while. Yeah, they kind of got technical with it. They said somebody asked them to go through like the mid-sized platform milestones. He's like, well, we're sourcing the parts, then we're doing product validation and builds, then we're doing like real world validation with like winter and etc. He said we're on track to unveil it at the end of 2026. So I was pleasantly surprised for a few reasons. One, they openly addressed margins. They told us how much margins impacted, how much tariffs impacted margin, and it would have been one of their best quarters had it not been for tariffs. This is great. This is obviously tariffs, you can't ignore them. They're here, but we're going to see like an 8% impact. So I think he said the delta was 21%. So let's think about this. Okay, hold on. I'm thinking about this in real time. Let me go ahead and continue to share the screen with you guys. Let me go back up to this margin chart because this is really interesting. So obviously he said their margins were impacted 21%. So 105 minus 21 is 84. Now they said that they're probably going to have an 8 to 15% margin headwind, but they think it's going to be towards the lower end of that. So let's what's the difference between 8 and 15? 15 minus 8. Let's do 15 plus 8. Come on, find the average. 15 plus 8 divided by 2. 15 plus 8 is 23. 23 divided by 2 is not 12. 23 divided by 2 is 11.5. Okay, I could have done that in my head. It was just, I was thinking about margins, not about math. Okay, so let's just say 12. Let's give them the benefit of the doubt and say 12. So 105 minus 21 is 84. So let's do 84 plus 12. Their margins are probably going to, if I had to take a rough guess, their margins are going to come in at a negative 96% margin or better. If they can beat their Q4 2024 margin, that would be amazing. They didn't have tariffs then. So if they could beat that, that would be incredible. This is going to be the number that I'm most focused on and the one that I'm most paying attention to. And if they're delivering mostly gravities and they only have an 8 to 12% headwind, that's really good. And if it's only if we take the extreme low end of that and say it's only an 8% headwind, then it could be negative 92. Lucid could be on pace for the best quarter ever of margins. So this, I wasn't expecting this. When I saw the headline, I was, classic Lucid. They're missing again. But I'm actually impressed by the CFO, the CEO. He does his job. He goes on Bloomberg. He goes on CNBC more than I've seen the previous CEO. And the CFO really did good. He addressed my concerns about margins and I wanted to hear about tariffs and the impact of it. So I know that people are going to be pissed and say like, hey, this was not a good earnings call. Lucid missed, stocks down, 8%? But I think they actually have, like, so much about business is getting the right people on the bus. And I think Lucid might actually have the right executive staff to continue to have this company go forward. Again, this is just a guy on YouTube that likes to listen to earnings calls, read slide decks, and create spreadsheets. That's all I am, okay? Nothing more than that. So this should not be, I'm personally not buying more shares because of this. I will let you guys know if I do. I'm not changing any of my investment strategies. This is not a solicitation to buy or sell any security of any type whatsoever. This is just for entertainment purposes only. So watch this video as such. But I really enjoyed this earnings call. I enjoyed it more than I thought I would. I am pleasantly surprised. And I don't think I've ever said that about a Lucid earnings call before. And I've been following Lucid since 2022. I followed them since their CCIV days. Okay. I have this like tough love relationship with Lucid because I want to see them succeed. But some of the things that they did previously, I just did not agree with. But I finally think, although they're not profitable, they're a long ways away from it. Although they don't have positive gross margins yet, I am starting to think the ship is starting to sail the right direction. And I think that's one of the first times I've said that about Lucid. I'm pleasantly surprised. I did not think I was going to say that tonight. So we're going to see, because if Timothée Chalamet starts selling gravities, they better send that boy up for a longer contract because, hey, whatever it takes. Cool. thank you guys so much for watching. I hope you guys enjoyed my analysis. I don't think you guys were expecting me to have kind of such a positive I don't think you guys expected me to have such a positive outlook on this. So if you guys enjoyed my perspective, consider subscribing. I would really appreciate that. The best compliment you can give me is just watch my videos for as long as you can. That's the best thing you can do is watch my videos all the way through. But thank you guys so much for watching. I will see you next time. Have a good night.